about creating this thing called a worksheet, which is and includes a few different things. It includes something called a trial balance, which is your preliminary set of numbers. And then you end up going through and drafting a balance sheet and an income statement, which will then be used to formalize the ending balance sheet and income statement that would be passed off to a manager of your business or analyzed by the accountant themselves. 6.1 is dealing with preparing the worksheet header, but then also preparing the trial balance section of the worksheet. So here's some vocab that you guys are going to see in this. We'll talk about consistent reporting, fiscal periods, fiscal year, worksheet, and trial balance in 6.1. Just a real quick set of reviews, just a little bit of review. Think back. What is a journal? And what is it used for? Do you guys remember? You should be familiar, but calling it out directly is a whole nother thing. So what is a journal? What do you do in it? Colin?
You just record transactions.
Yep. Yeah, you record transactions. In what order? By amount? By debit? By credit? By what order? By what? By date. Well, that's the chart of accounts. All right, so the chart of accounts is organized by liquidity. Yeah. And did you say density? Is that what I? I appreciate it. That's good. It is organized by date. It's a chronological order, and you're literally just recording transactions, right? That's it. What is a general ledger then? And what is that used for? This one's a little trickier. What is the general ledger and what is it used for? Chart of accounts with the numbers, exactly. Yep, it dealt with the chart of accounts and all the numbers. It was kind of like a breakout of all the different accounts, right? So what numbers go in the general ledger? And what's the ultimate purpose of it, I guess? So if a journal is for just transactions, the general ledger is used to post totals, account totals, right? Individual account totals, so that you know for whatever time period you're looking at, how much in supplies did you purchase? How much cash went in? How much cash went out? What were your sales? How much prepaid insurance did you buy? What is your accounts receivable balances, accounts payable balances, whatever, right? So it's a way to pull out number totals, and you pull numbers from the journal and you post those to the general ledger. So this idea of why would you even do this thing called a worksheet deals with consistent reporting, all right, and having these procedures that are repeated, and numbers that are added together so that you have a consistent tracking record, so that you can compare numbers from month to month, quarter to quarter, or year to year. So think about this example: like, what if a delivery business reports in 1 year the number of deliveries made, and then the next year they report the revenue from deliveries made? Can those two numbers be compared? No, not necessarily, right? They're two completely different things. So as long as you decide if tracking the number of deliveries is important to you, then you're talking about like a quota for drivers possibly for your business. And if that's important to you, then you would track that throughout the year and every year after that too. All right. If revenue is more important, then you track that. If both are important, you track both. But you do that so that you can compare things from year to year, because these comparisons are what tells you the health of your business. One thing you're going to see, fiscal periods. It can refer to a number of different things. All right. A fiscal period we're going to see is every month. All right. Our fiscal period for Delgado Web Services is every month. All right. So we're going to perform the trial balance and prepare the income statement and balance sheet for the end of every single month. Some businesses use quarterly. All right. At the fiscal period's end, a fiscal period consisting of 12 months is called a fiscal year. And that's usually January 1st to December 31st. But it could be different. Some businesses do June 30th to July 1st every year, because maybe they're like a retail business that does really, really heavy traffic and business over the holidays, and they don't want to be dealing with their year-end accounting stuff during their busy season, right? So they do it in the summertime when they're a lot slower. And that's fine. You can set that up. When you set up your business with the government, you choose what your fiscal period is going to be. So a worksheet is what we're going to prepare, and we're going to prepare this in 6.1, 6.2, and 6.3. A worksheet is just a way to transform or transfer stuff from the general ledger. Remember those individual account totals. You want to put those all in one place, all right? Remember back from some of those things that you guys had done where the general ledger was like a whole bunch of different individual sheets? You want all those numbers in one nice, tidy place so you can have a quick glance at all the numbers together, all right? So here are some reasons accountants use a worksheet, but I'm not going to go over that right now. So our goal in 6.1 is to perform a trial balance, all right? And this is just a proof that debits equal credits in your general ledger. Accountants do this at the end of fiscal periods so that they can find errors. If there are mistakes or errors made, you need to catch those before it goes on too long. And there is a procedure that you guys can use to track back errors, all right? From a general thing in which most accountants would make mistakes in the same way. So you start with the most obvious and then you get more detailed after that, but you have to find errors. If they don't equal, you can't really just move on. You have to know where the mistake or error was, and your debits have to prove to your credits. The first thing you're going to do is prepare the heading of a worksheet. And we'll do that when we look at the Cengage stuff, name of the company, the title of the document, and then you literally have to write out 4 month ended January 31st, 20 ... just because we're not have this. There is a step-by-step process to prepare the trial balance, and we'll see the entire worksheet when you guys look on Cengage. But the first part is a 6-step process where basically you're going to transfer, and luckily you guys don't have to write all those account titles. Those are written for you. But you're going to write all the account titles that you perform those general ledgers for. So any transaction you make, all of those different things are going to have their own individual general ledger accounts. Then they're going to be written there, and all of their totals are going to be written either in the debit or the credit column, depending. And if you look at this too, this is nice and broken up into, and this will matter later, assets, liabilities, owner's equity, sales or revenue, and expenses, all right? The organization of it does matter because when we go to prepare like the balance sheet and the income statement, we want all those things kind of in one place. It's going to help us a lot. So there is a reason for this. And it's basically just copying down your chart of accounts for the most part.